So, guys, as you already know, the stock market is a mess. The stock market is a mess, as you already know, right? All this talk by Trump about adding tariffs to goods coming in from Canada, Mexico, China, it's freaking out the stock market. I mean, over the last couple of weeks, you've seen it. The Dow, S&P 500, the NASDAQ, everything is in red. Everything is in red. Everything is going down, right? I feel bad for people who are on schedule to retire in 2025, who was doing well and had expected this money to be at a certain level, and now we've seen it being cut by a significant portion. So that's what's going on, right? The market does not like uncertainty, and we certainly have a lot of that. Let's jump into my computer. So here we are on CNBC, right? You see the title: Dow tumbles 700 points as new Trump tariffs rekindle market rout. Live updates. So we said we know that is the talk, and that's the only reason. That's the only reason. It's the talk of the tariffs that's doing all of this. That's the reason. Stocks fell on Tuesday after President Donald Trump placed additional tariffs on Canadian steel and aluminum coming into the U.S., rekindling a market rout that puts the S&P 500 on the cusp of a correction. And a correction, as you already know, is a decrease of or a pullback of 10%, right? At least 10%. And the reason why Trump increased the tariffs on Canadian steel and aluminum from 25% originally to 50%, he did that in response to Canada saying that they were going to add their own tariff in reaction to Trump's tariff from energy produced in Ontario that comes to some of the states that borders Canada, such as the northern part of New York and maybe Michigan and some other states. But they only did that because of his initiating the tariff. And now he's doubling down by doubling the tariffs on steel and aluminum from 25 to 50%. So again, tit for tat. And we are paying the price and seeing the reaction in the markets. The Dow Jones Industrial Average lost 700 points or 1.7%, its fifth decline of more than 400 points in March. We're in early March and it's already its fifth decline of more than 400 points in March. And all of this is the same reason, the talk of tariffs. The S&P 500 dropped 1.5%, bringing its decline. The S&P 500 dropped 1.5%, bringing its decline from an all-time high reached in February to 10%. Again, the definition of a correction, 10% or more decline. Right? From its all-time high in February, it's dropped now, total of 10%. So, and we have seen that in our portfolio, right? If you own the S&P 500, right? The 500 biggest companies in America, whether you own it through VOO or some other index, you've seen a 10% pullback from the peak in February. The NASDAQ composite was trading 1.2% lower, extending further into correction territory. And so it's already been at least a 10% drop. It's extending further into correction territory. And the NASDAQ is heavy with tech. So all the semiconductors, companies that make computer chips, the NASDAQ and Broadcom and so on. And we've seen the pullback on those. The tech heavy index, which has seen the brunt of the selling over the last 3 weeks, is 14% off its high. 14%. And we've seen that in Nvidia, for example. And here is where it explained. The S&P 500 was briefly in the green at one point during the trading session before Trump declared on Truth Social that Canadian steel and aluminum duties would double to 50% from 25%, effective Wednesday or effective tomorrow. This is the latest in a series of disorderly trade policy moves that have stoked fears of tipping the U.S. economy into a recession. Self made, right? You know, like a self inflicted injury. It's, 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 it's of our own doing, or really his doing, or the people that voted for him. This is why we're here, right? This is why we're here. On Monday, the NASDAQ saw its worst day since September 2022, dropping 4%. Right? So its worst day in more than 2 years. The 30 stock Dow lost nearly 900 points. Citigroup this week lowered its rating on U.S. stocks to neutral from overweight, pointing to a quote, pause in U.S. exceptionalism, end quote, at the reason. There's clearly a tolerance for pain on the part of the administration in pursuit of trade goals that are not necessarily entirely economic in nature, said Roth Mayfield, Baird investment strategist, which basically means they're pursuing this trade war, and it's not entirely for economic reasons, right? But the brunt of it is going to be felt by middle income, working class people, a lot of them who voted for him. Quote, at this point, I'm still in the camp that we are not on the doorstep of a recession, but maybe a slowdown of growth scare. But maybe a slowdown or growth scare. Non-recession sell-offs tend to be shorter and milder than the recessionary ones. He's saying the slowdown, which is not secondary to recession, usually lasts a shorter time, which is good. Delta Airlines added to the recession worries Tuesday as the airline slashed its earnings outlook due to weaker U.S. demand, pushing the stock down more than 8%. Which makes sense, right? Because if people are seeing their portfolios shrink, unemployment is going to unemployment goes up because of all the layoff, right, from the federal workers and so on, then GDP is going to go down, right? And people are going to travel less. So that makes sense why that would drop the Delta airline stock, right? Because when you're broke, the first thing you cut is discretionary spending. Things that you don't have to, things that are not necessary, such as travel. Other travel related stocks followed suit with Disney down nearly 5% and Airbnb off by 4%. Again, makes sense. You'd also see hotels, the cruise lines, they would also drop because of they're all discretionary. Along with haphazard tariff moves, comments from the administration in recent days have stoked investors' fear about the economy. Over the weekend, Trump said the economy was going through, quote, a period of transition, end quote. The remarks arrived after Treasury Secretary Scott Bessent told CNBC on Friday that there could be a, quote, detox period, end quote, for the economy as the Trump administration slashes federal spending. Investors are eagerly anticipating the release of February's Consumer Price Index due Wednesday or tomorrow. It'll be really important that we don't see an upside surprise on Consumer Price Index. Meaning, I guess, it's more expensive to just buy stuff that we need. Because at this point, the Fed does have plenty of dry powder to step in to cut rates and try to boost demand if the economy were to meaningfully slow, Mayfield added. But they can only really do that if they really feel that inflation expectations and inflation are well anchored. The sell off Tuesday would have been worse were it not for a rebound in some technology shares that got hit hard on Monday. Nvidia, which lost 5% yesterday, right, Monday, was up 2% on Tuesday. Here's how far the major averages have fallen from their all-time highs. The S&P 500 is down 9.5% from its all-time high of 6,144 on February 19th. 9.5% fall in a very short time. And with the correction begins at about 10% fall. The Dow Jones Industrial Average is down 8.3% from its all-time high of 45,000 on December 4th. And the NASDAQ Composite is down 14%. That's a tech-heavy sector, includes NVIDIA. It's down 14% from its all-time high of 20,173 on December 16th. So everything's down. Everything's down. But there's a glimmer of hope. One, we know that it's from the talk about tariffs, right? The market sell-off isn't as dire as it seems, says Deutsche Bank. Deutsche Bank analyst Luke Templeman argued that the continued weakness for U.S. equities this week isn't indicative of both slowing corporate expansion and a looming recession. That's not the reason, right? That's not the reason why equities are down. It's not because of slowing corporate expansion, like businesses are not doing well, or a looming recession, because of the talk of tariffs. The upshot is that while the U.S. equity market sell-off will undoubtedly make many CEOs nervous, it does not have the hallmarks of price sell-off that were actually associated with a material dip in corporate and uncontrollable economic factors. Templeton wrote Tuesday, and uncontrollable meaning the talk of tariffs is controllable. All of this is happening because of stuff that Trump is doing. Once that stops, the market should rebound. We run the numbers and show that the majority of companies have been relatively resilient in the market this year, he added. So, even though the market is legitimately worried about very high levels of economic uncertainty at present, it is premature to predict an extended pause in corporate expansion activity, and we continue to expect this to pick up materially in the second half of 2025. So we're talking about July and forward. They expect the market to pick up. So I think that's a good segue into, so what should we do? So we know what's going on. We know the reason why it's going on. We see the results of what's going on. We see our portfolio coming down. But what do? Now you're losing thousands and thousands of dollars on paper, unrealized, right? And psychologically, it can affect you. It can absolutely affect you psychologically. Well, we do not want to sell. That's the one thing we do not want to do is sell. That's the one thing that we don't want to do. So let's first talk to the people who had plans to retire about this time. Obviously, the money's not going to be there or to the level where you thought it was because of what's going on. And obviously, we hope and pray that this is a short-term thing and things will normalize. However, one of the things that we may have to consider is to delay our retiring. I know it's not something you want to think about, but to maybe delay our retiring for another year. If we can, try to delay your retirement for another year. That way you don't have to pull down or sell those beaten down stocks. Okay? So another thing we may have to do is try to build up our savings. Try to build up our emergency savings so that we can draw from that and not from our portfolio that is down in value. Now, for the rest of us who have a little more time, we have to hold on, right? This is going to really check or test your intestinal fortitude. Do you really believe in what you own? Do you really believe in the stocks? Do you really believe in the company in which you own? Because if you do, you're not going to sell them at a beaten down value, especially if we think this is just short lived. We know what the reason is, and hopefully this can correct itself. And in addition to not selling, we want to use this as an opportunity to buy more of those, whether it's the S&P 500 or the individual stocks that you like or the ETF, buy more at this depressed price. So it is a tough time for everyone. We're all going through it together. And we want to come out on the other side even better than we were before we went into it. MD Investor with another video trying to increase our financial IQ. And I will see you on the next one.